Good day. I'm Martin Gago with Market Radius Research. It's Thursday, May the 12th, and we've got CEO Fred Dugre of H2o Innovations joining us. H2o is a municipal and industrial provider of water purification products and services, and they just released their Q3 fiscal 2022 results for the quarter ending in March. And we have Fred here to join us to discuss the strong results that the company saw in the quarter. But please remember, this is neither a recommendation nor investment advice. We're here to learn about the company. Fred, thanks a lot for joining us today. And please give us an overview on the quarter.
Well, my pleasure, Martin. And I mean, even more good news than usual. I mean, we're sharing an excellent performance for this third quarter results. Really happy of the overall turnout for this third quarter. I mean, a lot of growth was behind this quarter. Obviously, we're showing a 32% increase into our sales. So this is quite significant. A combination of both organic growth, which is really important, and external growth also coming from acquisition. This is something
Fred, can you just give us a quick reminder? What were the acquisitions that happened that was the acquisition growth? What businesses did you buy?
Well, there was 3 acquisitions in the last 12 months that impacted this, but most likely the one we announced in mid-December, for the acquisition of HEO and EC. So these are 2 O&M companies based out of New York doing operation and maintenance. So this is being added to our platform of operation and maintenance. And this was completed officially in mid-December. So for the first time, we have the full contribution of these 2 companies into our quarter. And previously in the last 12 months was the completion of the other acquisition in Spain, GMP. So now we're working, we have announced another one that we're working on at the end of June for the Maple division.
All right.
So excellent quarter, as I said, in terms of growth organically and through acquisition. And it's not by chance, it's really by design. If you remember, I mean, in the previous quarter, we started to invest more and more into sales resources to further expand our sales capabilities. And this is now paying off really nicely. Through this, we have significantly increased our EBITDA, both in percentage and growth year over year. So 5.3 million EBITDA for the end of this quarter. So this is a nice increase of 18% from the previous year. The adjusted net earnings also reached 3.4 million. So this is 55% up from last year. So this is a great expansion and improvement. Also, what makes me also feel pretty good and confident in the future is the level of backlog. The combined backlog of projects and operation and maintenance now stands almost at 109 million. And this is not even including the latest renewal that we got, and this was announced in April, for the large project of $13.75 million a year for the city of Gulfport in Mississippi. So with this contract only, we would be adding 55 million to this 109 million. I mean, 109 was reported at the end of March, but we could consider that the 55 million, because it came right after, should be added as well. And recurrent revenues and steady business and good repeat customers.
You were also mentioning on the earnings call this morning that you've got Evergreen, I believe they're O&M contracts that do not as well get incorporated into your backlog. Is that right?
That's correct. So all the Evergreen projects and contracts, mostly based around New York State and Houston area, are Evergreen contracts. Now, we're getting renewed on a yearly basis, more or less, but we do not add them into the backlog because they're not necessarily long-term fixed contracts as we have for the other ones. So this is on top of it.
To sort of state the obvious, they basically keep going until you essentially get fired. That's kind of
more or less, yes. That's how it works. Exactly.
Okay. Or they have whatever reason to change things around.
Exactly. Well, it has the benefit also, typically, the Evergreen contract comes with slightly better margins because of the short-term visibility. So a contractor will require a little bit more margin than if you are locked in for a long-term contract for 4, 5, 6 years, whatever. So this is why, in this case, in H2o, we have the benefit of both sides. We have the long-term contract, but then we have also the short-term contract, the Evergreen contract, with slightly better margins, with a lot of service and add-ons and other complementary services we're providing to them.
Do those Evergreen contracts, after they've worked with you for a while, they just say, you know, this is silly, this Evergreen stuff, why don't we kind of lock it into a 5-year deal and that? Or do they just, some municipalities or areas just prefer it on an Evergreen structure?
It can happen, but most of them, because they're designed this way, all the MUDs business, for example, the municipal utility district business we have around Houston, is designed in a way that it's being renewed more on a yearly basis as an Evergreen contract.
All right.
Yeah.
Okay.
And if we continue, and take a look at each of our business, talking about the operation and maintenance, well, it was a busy quarter and fantastic quarter for growth. A little bit more pressure on the margins, on the EBAC margin, as you can see. However, the business was extremely busy starting up new projects. I mean, we won over the last 12 months 6 new operation and maintenance projects across the country. So this is quite a lot, and this is also typical when you start a new O&M projects to have a little bit more pressure on your margins, because you're adjusting yourself, you're putting new personnel in place, you have transition cost as well that kicks in at the beginning of a project. But this is why also when you go over time, when a project becomes more mature, you usually start to benefit and improve the margin over time. So 6 new projects signed over the last 12 months. So this fuels the growth. We got 5 renewals, including the one also that I told you about the scope in Mississippi for Gulfport. 7 scope expansion. So a scope expansion is having an existing project and the customer is asking you to do a little bit more work, other things. So this is nice because this is how you make money on the edges, right? I mean, you have an existing base, you have an existing personnel, they ask you to do more scope of work, and then you can further expand your margins and add more capabilities to it. So this is nice. And 2 acquisitions, as I said, were completed in the operation and maintenance team. So great quarter.
With the EBAC margin declined a little bit, is that's in combination of general inflation and then the launch of a bunch of new projects? Are those the main kind of drivers on it?
So these 2, so launch of new projects, a little bit more pressure with labor and margin inflation, but also the COVID still impacted us a little bit, in the beginning of the 3rd quarter. So January and February, there was still cases of COVID out there. And it means what? It means that when I have an employee who is sick and has to be quarantined, staying at home, he cannot perform the work. I have the obligation as a contractor to go to an agency, for example, and hire or do some overtime with the other personnel to overcome, this shortage in personnel. And that impact my cost. So I will see that more momentarily. Let's put it this way. In terms of conjuncture related to COVID, startup of new projects, and also the fact that there is tremendous pressure on the inflation for salaries. But overall, I mean, the company is still in really good shape for operation and maintenance.
And in the O&M business, it's about half of the costs are labor, something like that?
Oh, more than the half. I mean, this is by far the main cost is related to labor. I mean, this is what we provide. We're essentially a service provider. Yes, we do have equipment and parts that we buy and resell, but this is mostly labor business.
Okay.
If you look at the WTS, this is fantastic. I couldn't be more proud and happy to see the big turnaround in terms of growth, in terms of margin. This is a big shift. And we expected that. I've been mentioning it now for quarters. We knew that as we were ramping up the backlog with good quality project, with a nice diversification between industrial and municipal, that this will pay off. And this is exactly what started to happen. So growth into our sales, we're doing more and more services also with the team, and margin is improving and continuing to improve. So this is quite nice to see the business standing as it stands now. It will remain very busy for the next couple of quarters. I mean, we just started, for example, to do the engineering and a little bit of fabrication for the single largest project we have in the backlog. This is for the city of San Diego. for the big water reuse plant under construction. It is a $10 million scope of work for us, and we just began the construction and the engineering. So now in the fourth quarter, there'll be a little bit more recognition, but mostly in the next fiscal year, this is where we'll start to see a ramp up into the revenue recognition for this project.
Gotcha. Well, I was surprised on the margins on this. They didn't decline. It looks like there's a slight decline there. I would have thought, given all the materials inflation out there, that this would have been more negatively impacted by inflation, but it seems to have done pretty well. Do you lock in your inputs when you bid on contracts, or just good management of that, or how did that work?
Well, it's a bit of everything. It's not happening by chance. It's really by hard work. So there's two things as part of that business. So there's the water technology and services. So there's a portion of the revenues associated to services, which is fairly important, that we do that is being adjusted on a daily basis. So if you're a customer asking me to buy a couple of membranes, I will buy it on the market at a given price, and I'll give you the price of the day, right? So my margin will be protected all the time.
Yeah.
Now, we have on the other end for the water technology fixed price contract when we built an equipment. And there's two things. In some cases, we have been able to negotiate with a customer CPI inflation arrangement for the cost of living over the last couple of months, because this PO has been sitting into our backlog. We have been able to negotiate change orders with the customer also to help us out to protect the margins that we had. But it's a lot of work. And this is why I'm particularly proud of the team on the attention, on the care, and the push and the level of effort they're spending to protect these margins.
Okay.
On the specialty products, well, I think, the little chart that we're seeing here says it all. I mean, the business is booming in multiple ways. We have been growing our distribution network internationally. We added multiple resources in sales in South Pacific, in Middle East, in South America, to further sell these chemicals, to further sell these specialty components for Piedmont, and it's working very nicely. And we're starting now to collect the benefit of that. The Maple Division equipment also had a terrific year, really, really good year, despite the fact that, yes, there was a lot of inflation and cost management to do with the inflation in the supply chain, but they had a terrific year. And everything indicates that now, because they had a really good maple season this year, the producers, that they will continue to spend money in the following year to further grow their maple production. So this is exciting for the future. In terms of the desalination market itself, and this is where we're seeing most of the growth coming from, we're still expecting a good 2 years in front of us to continue to grow on that trend. So this is exciting, and this is why we decided to invest even more into our sales organization, for example.
Gotcha. And on the maple syrup side, Quebec is in the process of adding that 7 million new taps. The farmers, or whatever you call a maple syrup harvester, they've made a bunch of money, so they can invest. They have the money to invest to build out those new taps that are being regulated into existence.
Exactly. So 7 million of new taps will be given over 3 years. And the good news is that because there's so much demand, so if you remember in Quebec, they created this federation who created a big reserve for the maple syrup, where large buyers can come in and buy at fixed price, the maple syrup, to create some kind of protection in the price for both the producer and the consumer as well. And they have been able to sell so much that now the reserves are going down and down and down and down. So this is why they want now the producers to produce more to ramp up again this reserve that they have put together. So the good news is that not only the producers are making good money this year because it was a good season, but they are now collecting money and receiving money from the previous years where they had maple syrup stored into the federation, because now it's being sold on the open market. So it's a perfect conjuncture conjunction for us to further grow that business. This is why also lately we announced after the Q3 our intention to buy a long-lasting company named Leader in the Vermont. So it's a 130 years old business, doing pretty much like we're doing with the Maple division, but in the US. So now the combination of both business will create definitely a market leader in that space, with 2 manufacturing facilities, one in Vermont, one close to Quebec. And with that, we'll have a larger portfolio of products. We will have 100 distributors plus covering both USA and Canada. So this is quite exciting. I look forward to announce the final conclusion of that transaction in the next couple of weeks.
All right. And going back to I believe on the specialty chemical side of things, on your earnings call, I believe you talked about like your green chemicals, some of the non-green chemical, the traditional chemicals that are there, I believe phosphate-based stuff, the prices have been going way up. And so you've got the green option and your prices aren't going up as much as your costs aren't going up as much as the phosphates are.
Exactly, that's it. So not only it has the benefit of being more independent from the fluctuation of phosphate price, but it's a green chemistry because it doesn't have any phosphate. So there's a benefit of price and there's a benefit of being green. And right now it seems that our sales are just booming. I mean, we have increased significantly the production. We're now contemplating to make additional investment into our facility in the UK. We have already done $1 million investment into our facility in the UK to in-source other product, also powder product. Because when you make cleaners, so the antiscalant example you gave about, the phosphate and non-phosphate product is for one group and one category of products we have. And this is going extremely well and we see great momentum. On the other end, we do have also another type of products called the cleaners, because you need to clean periodically these membranes. And as you use cleaners, you can have 2 types of cleaners, the liquid or the powder. And obviously, when you carry and export liquid, I mean, you carry water more or less from site to site.
Yeah.
And it takes a lot of space. The freight cost is going up, and it takes more manipulation. So when you do powder, you remove water, right? You remove water. So what you export is a solid from point A to point B. You reduce significantly your cost of freight, the CO2 emission, the storage. It's safer to manipulate and all that. So there's a lot of benefit to shift also more and more towards powder. This is why we made this investment as well in UK to grow the facility and source more manufacturing of powder to control price, to control delay, to control quality, and be more responsive for our customers.
On your green chemicals, are you seeing with all the ESG activity in the world, are customers, are they being more driven and incentivized to go that route?
Unbelievable. It seems that it shifts overnight. It's strange, but I mean, frankly, we have been making this chemical for more than 10 years, believe it or not. And we had modest growth, tried to promote the benefit of the dendrimer on the same basis that you just explained. Less dependent with phosphate. It's a phosphate-free. It's more environmental. And for years, we have been promoting that we are PWT. It's a green chemistry. Now what? Today, all ESG, drivers are there. And yes, customers are shifting and adopting more and more this this idea, because it's not new. So for us, it's coming like a perfect and fantastic storm, and we're dealing with this growth.
All right, that's great.
And when you look at the overall business with the business mix, I mean, I think, this chart also says it all in terms of growth trajectory, where we're heading at. So not only we're focusing to continue growing the company, but continue to push for profitability improvement. And as I said, we're going to push really hard to protect our margins and further find also ideas on what we can do to not only protect, but come up with new products to enhance these margins again. So we're really happy of our trajectory. It's well in line with our 3-year plan in terms of growing the business at a double-digit growth rate. but also to maintain and aim towards an EBITDA above 11%. And we feel pretty confident to achieve that in our 3-year plan for 2023 and 2024. So
what struck me on looking at this chart is until like 2019, like revenues were really outpacing your EBITDA or your adjusted EBITDA. But then in 2020 and there, it really caught up. So all the investments and the scale you'd been building in the prior years seems to have kind of with like slingshotted the EBITDA to get sort of catch up to where it should have grown to in relationship to the revenues.
That's right. So there's a combination of things. Obviously, it's all the good work that was spent by our team to pay attention to cost, improve things, change our business processes, gain efficiency, and aim towards more operational excellence. There's also a matter of scale that kicks in. There's a certain amount of fixed costs that you have as you reach a certain point that do not scale at the same pace, then your top line will grow, and that creates more expansion into your margin as well. So there's a combination of factor that, is explained behind this performance and improvement, but yeah, we're happy where we are and we're going to continue growing.
You've mentioned several times that, and for a past while now, that you're investing in your sales and marketing organization. Was it one big investment? And can you say, well, this will drive our revenues up to 200 million, then we have to do another sort of big investment? Or are you going to be doing more sort of every year, add a handful of salespeople to the mix? And so it's not such a big step function that it hits so hard.
Yeah, I'm afraid a little bit of the step function. So I prefer to go like a modest, increase every year. You see, last year we added across the different divisions about 9 employees related to sales.
Yeah.
So I mean, this is what we're starting to see now. I mean, obviously the sales cycles for chemical are faster than what it is usually for an equipment business, right? So the guy, let's say that we added in September for the equipment related and big system, is now starting to come up with results, right?
Yeah.
But the guys in chemical, usually within the first few months, you can start to generate orders. The sales cycle are different. But I would prefer, Martin, to move over time and add, an approach where we keep growing, not into a step function, because I'm afraid that I don't want to create too much of inflation into our cost and not be able to catch up, with the profitability.
Okay, that makes a lot of sense there. Okay, and then on your recurring revenue, okay, great. We're getting to this slide. The recurring revenues, those are your specialty products and O&M. And what I was going to ask, like last 3 years here, you've been in the mid 80s. Should we be expecting that going forward? It's going to kind of stay at those levels, or is the rest of the business, is that part of the business actually going to grow faster than the non-recurring side?
Well, I think, it's not, I mean, you see the move from 87 to 85%. I think it's more related to the business mix itself, because, it's not like we have lost customers. It's just that punctually the WTS business for the equipment is growing more and faster. So this is why you see this number going down. But I think, it will be a fair comment to say that predominantly we want to be highly recurrent with 80% plus, let's say. Okay. But also it depends on the business mix. But O&M will remain really strong and represent still an important portion of our business. The service part also is highly recurrent. We have then the consumables coming from the specialty products. So all this adds up. But at the end, if there's more and more activity coming from the WTS, it will create more inflation on the percentage of this. But at the end, I think it will still remain above, the 80% threshold. Okay,
so in that kind of range. Because you've talked before, you use WTS because there's tons of that business out there, but you're very strategic in picking the ones that kind of strategically make sense, where you can hopefully get some recurring revenues after the fact, and you come in at a reasonable margin, not just taking any business that will come.
No, I don't. That's absolutely it, Martin. And we have suffered in the first few years to do that. I mean, I guess it was part of our journey to build up these references, to build up and create the reputation that we have now. But after 22 years in doing it, I think today we don't have to drop our pants, too much. Let's put it this way.
Yeah.
And stick behind it. I mean, this is what it costs to have a system. If you don't like it, well, I mean, there's other competitors out there. And so far this discipline paid off, and it shows into the numbers, and the team is executing well. So yes, we'll remain very disciplined moving forward.
Are you seeing a big change, any significant changes in the competitive landscape where I know some customers are getting more aggressive, or new products, or consolidation, and big companies being bullies? Or
Well, not much. I would say that, I think everyone is super busy right now, which is a good problem. So it's different when no one is busy and then everyone is starving. So it's not the case. So it's a healthy environment in terms of business, and I think it will remain healthy because the water business itself and water industry has a terrific growth ahead. On the other end, we saw some shift onto the specialty products, mostly coming from the chemicals, because our competitors mostly relies on phosphate-based products. So let's say they're suffering more than we are, so they have to increase their prices to protect their margin significantly to the end user, which we don't have necessarily to do. So this gives us a competitive advantage, a significant competitive advantage. On the other end, also, Piedmont has a very flexible approach when it comes to approaching manufacturing, because we use strategic partners in third party to manufacture products for us. So FRP, filter housing, and couplings are done by third party. So this gives us also a nice flexibility into our cost structure, enabling us to absorb more easily all the overhead, and cost fluctuation. So I think our business model is just very solid, in the right spot, in the right place, and yeah.
All right. I think we've kind of hit the key points here and wrap things up. Any sort of ending highlights to point out as we wrap it up?
Well, really happy of the growth. Really happy also of the improvement and growth into the EBITDA dollars. Business is remaining really strong and big renewal for the city of Gulfport. Again, this renewal did not impact yet the third quarter result. It will start to kick in on the fourth quarter. We have also invested a lot into our businesses in California, in UK as well for the chemicals. So can't wait to have the first batches of specialty cleaners made in the UK in this coming quarter. So this is exciting, and backlog is healthy. Market is still really good for us. I mean, water, no matter what, recession or no, will remain essential to our life. So I'm not too worried about the future.
All right, Fred, thanks a lot for chatting with us and going over the quarter. That was great. Congratulations on a solid quarter, and we'll talk to you again soon. Cheers.
All right. Thank you. Have a good one.